Okay, François, if it's all right with you, we can start?
Fine, of course.
All right. My name is Aldo Sicurani. I am the general manager of NextWise, a French fintech, which in association with Euronext has launched the Euronext Trading Game. The Euronext Trading Game in which you participate has several tools to help you to build efficiently your portfolio, and one of these tools is StarQube. StarQube is a platform and a software based in Geneva, Switzerland, and it helps managers to build ESG portfolios. And it provides the different tools to do that. And StarQube has partnered with us to provide to students specific tools to use ESG in their portfolio. And there is one point I want to stress at that point, that is that to succeed in the Euronext Trading Game, it's not compulsory to have an ESG portfolio. That won't give you extra points or whatever, but if you want to have an ESG strategy, StarQube has the perfect tool to allow you to do that. So I will now leave the floor to François Lemoine, who is head of business development, and who will stress more particularly what are the difficulty to build an ESG portfolio and how StarQube can help you to do that. François?
Okay, thank you, Aldo, and good evening, everyone. So indeed, as Aldo explained, the purpose of the presentation tonight is to do a demo of the platform that we are providing you with to help you build portfolios that integrate ESG. But before that, what I would like to do is spend the next 10 to 15 minutes speaking a little about ESG or sustainable investment and how sustainable investment has evolved through time, let's say during the last 25 years. The purpose being to convey this message that it's not that easy to integrate ESG in a portfolio. And it has complexified through time. And I'd like to highlight this complexity just as an introduction to explain what we are doing at StarQube. I will say just a few words about StarQube, and also to help you understand the value of the data that we are providing for the Euronext Trading Game, and help you understand how you can leverage the platform that I will show during the competition. So let me jump back in history and jump back to basically the end of the 90s or the beginning of the years 2000. At the very start of sustainable investment or ESG, the pioneers, let's say, they developed an approach to a sustainable investment which was based on sectoral exclusions. So sectoral exclusions was an approach that consisted in saying, well, I don't want to be exposed to a number of sectors. And these sectors, typically, that was tobacco, that was alcohol, that was gambling. In some cases, the nuclear industry. And more recently, also, we've seen some exclusions of the oil and gas sector. This approach, it had a very strong advantage, which is that it did not require any ESG data. and so that was quite easy to implement. You just needed to know for each company in your investment universe to which sector they belonged to. And from there, you could have a sustainable investment strategy. But this strategy also had a very, very strong drawback, which is that by construction, when you do sectoral exclusions, you have sector biases in your portfolio, meaning that when the oil and gas sector, when the oil price peaks in a year and the oil and gas sector outperforms on the stock market, if you don't have exposure to the oil and gas sector, well, by construction, you underperform your peers, you underperform your benchmark, and that's always difficult to explain to your investors. So because this approach to sustainable investment based on sectoral exclusions had such a drawback, the next approach that was implemented was best in class. So best in class, that was an approach to sustainable investment, which consisted in saying, okay, I don't want to exclude totally a specific sector like oil and gas, tobacco, alcohol, but what I'll do is within each sector, I will select the companies that are best rated in terms of ESG, or I will overweight these companies against the companies worst rated on an ESG basis. So this approach, best in class, has had some success. But there again, had some success. Sorry, what I wanted to say is, as you understand, to be able to do that, you need to have ESG scores. And so that's been the beginning of ESG scores provided by such companies as Morgan Stanley Capital International, MSCI, or Sustainalytics. But this method, it also has some drawbacks. And the main drawback is that when you just use a score which is provided by an external company, well, you don't really know why a company is better rated than another. You don't have much transparency on how the score is calculated. And at the end of the day, when you need to explain your strategy to your investors, you don't have much to say. And the issue is that the asset management is an industry which is very marketing based. You need to explain what you're doing. You need to explain to your investors why you're different from competitors. And once again, with just a score, you just like arguments. You don't have a story to tell. So the next approach to sustainable investment which developed what I would call ESG integration. And by ESG integration, I mean strategies where rather than relying on external scores, you build your proprietary scores. So you build a methodology that allows you to have your own internal scores based on your own philosophy of sustainable investment. But there, as you understand, that means that you no longer need just one information, one score per company. You need to have very granular information about the ESG profile of the companies in your investment universe. And so you need to collect much more data. And obviously that complexifies quite strongly your ESG data management. Just to give you an example with MSCI, when they build ESG scores, they say that they collect up to 1,000 data fields from companies. So that's a massive data management. So through time, there have been a lot of other approaches to sustainable investment which emerged. I will not go through each and every strategy. Some people are doing some stewardship, some asset managers are doing some impact investing, and some are doing some thematic, are building some thematic funds to invest in a specific theme, such as, for instance, biodiversity. I would just like to finish mentioning one strategy which is quite popular today, which is net zero. Net zero, that's an approach to sustainable investment which consists in building portfolios that should help the global economy converge towards net zero carbon emissions by 2050. And to be able to do that, as you will understand, you need to have and to build some carbon trajectories, meaning that you're no longer looking at past information, you're no longer looking at information which have been reported by companies in their yearly financials. You need to have a forward-looking approach to carbon emissions and to build prospective information. And as you guess, that complexifies even further sustainable investment. So I will stop here speaking about the different approaches to sustainable investment. I would just like to say a few words in terms of volumes to further illustrate the complexity of these approaches and about the operational issues that you will face if in the future you decide to be a sustainable investor. So in terms of volumes, very rapidly, to give you some metrics, some clients are at some clients of StarQube which do sustainable investment. They sometimes collect up to 500 data fields on all the companies within their investment universe. What is an investment universe? Well, that's basically if you have a global approach to investment, you can have like 15,000 companies that compose your investment universe. But when you invest, you don't invest in a company, you invest in financial instruments. So 15,000 companies, that often means 100,000 stocks or bonds that these companies have issued. And then in terms of operational issues that you have, you need so to collect hundreds of indicators on thousands of companies and potentially hundreds of thousands of financial instruments. This information you collected from multiple data providers. And then you need to be able to automate the collection of this information. This information is often poor quality information, so you need to have data quality controls to be able to remove the inconsistencies in the data. You need to reconcile IDs. What does it mean? Well, it means that Bloomberg, Standard & Poor's, MSCI, Refinitiv, all these data providers use different IDs for the same instruments or the same companies. So if you want to navigate seamlessly in your data, you need to reconcile all these IDs into unique IDs to be able to, well, make good use of your database. And then beyond that, you need, of course, to build your proprietary metrics and use this information in your portfolio construction process. So that was to explain in a few minutes how sustainable investment has evolved and how complicated it is to have a strong sustainable framework. From here, I would like to switch to the NextWise platform and just say a few words about StarQube, because this introduction aimed at explaining what we are doing at StarQube. So from the NextWise platform, here on the top right of the screen, you have 3 points here that allows you to click on companies. What you'll see here is all the companies that are partners of the Next Challenge and NextWise, within which StarQube. And from there, you can switch to our website. And what I'd like to say just in 2 or 3 sentences is what we do. So at StarQube, what we do for our clients, we help them build scalable data foundations. And from there, we help them transform this data into investment excellence by providing tools to build portfolios, optimize portfolios, backtest investment strategies. All this is further explained in the solutions section of our website. And I would also like to invite you, if you're curious, to browse our library of articles, where I think you can find quite interesting articles. For instance, here we explain what it means to decarbonize a portfolio, to build net zero portfolios. You'll find here a case study where one of our clients explains how he leverages StarQube to construct its own net zero portfolios. And I would just highlight a last article here about 3D portfolio optimization, where we explain how you can optimize a portfolio using both returns, risk, but the third dimension, which is sustainability. Okay, enough speaking about StarQube. Let me now turn to the platform. And now to do that, I will switch back to NextWise, click on my profile. And from my profile, you can click on StarQube, and then you access the login page. So hopefully it's not going to take too long to unfortunate today. Let me restart that. Hope we don't have problems. We had some issues in the past few days. Deeply sorry if we can't. Okay. Okay, so now I'm on the login page of the platform. So from here, you just need to complete your ID and the password that you should have received from NextWise. Then don't click on single sign-on, but click on login. That gives you access to the platform. From here, just a few words about the top of the screen to say that you have a small wheel here that allows you to log out if needed, or also to change the theme of the screen. So as you can see, I have a white screen here, but if you prefer to work in a dark mode, you can switch to a dark theme here. I'll switch back to the light mode. Second thing I'd like to say is, please do not use the workspace or the menu here. That's useless for the Euronext Trading Game. So that's really please don't click here. That will not help you. So just focus on the analysis section of this panel. And here you will find 3 screens that I will go through. The first screen is meant to help you analyze the ESG profile of a specific stock. The second screen will allow you to analyze the ESG profile of your specific portfolio. And the third screen will allow you to analyze the ESG profile of all the instruments that you have access to in the competition. So let me open these 3 screens. They open here on the right-hand panel. To save space on my screen, I can close the left-hand panel with this little arrow. If I want to display it again, I just re-click here. But let's use the entire screen. So now I have my 3 screens here, and each screen is made of different windows that we will browse together. So starting with the stock screen. First thing you I must highlight is that the stock that we are analyzing is described here at the bottom of the page. So here we are looking at Hermès International, which is a French company. Its ID is C-RMSE, and this ID, you can find it here in this little box. If you want to analyze another company, you just need to type the name in this box and just double click on the ID. And now I'm looking at the ESG indicators of Air Liquide. For the sake of the competition, I will look at, LVMH. So here we have, and now I will explain what you will find in this table. So basically for LVMH, what we have, an ESG score which is calculated by StarQube that was at 60 in 2022, down to 58 in 2023, and now up to 61 in 2024. Then you have a number of environmental metrics. I will just comment one of these metrics. I will let you discover all the other metrics. Here, for instance, the GHG emissions intensity tells us that LVMH is obviously a low carbon company with just 95 tons of carbon per million euro of turnover. That's the low figures, as you will see by comparison with other companies. Then if you browse the table downwards, you have social and governance indicators. So for instance, that tells us that LVMH is a very women-intensive company with 71% of the workforce which is women. And that tells us that it's a company which has perfect parity between men and women on its board, with 50% women on the board of directors. Further down in the table, you will find taxonomy indicators, which are European regulation, mandatory information that companies must provide. Moving on to the other windows, one word to say that you have a disclaimer here. The disclaimer is just here to remind you that there are copyrights on the data. So the data that we show and that we use on the platform is provided by a French company, which is Cofizem. And that explains that due to the copyrights, you are not allowed to extract the data, and you should make use of the data for the unique purpose of the Euronext Trading Game, and you're not allowed to use the information for any other purpose than this challenge. Then you have a note window, which gives you all the descriptions, the definitions of all the indicators that we've seen in the table. So all the environmental indicators are described here. You also know into which units they are expressed. You have the descriptions of the social indicators here, and you have the descriptions of all the taxonomy related indicators at the top of the screen. So the ESG metrics window is just the table that we've already described. And lastly, you have a chart here that shows how the score of the company you're monitoring, so here LVMH, has evolved over the past 2 years. So the ESG score of LVMH is in 2024 at 61, and it's composed of a social and governance score, which is at 76, and an environmental score, which is at 46. That's it for the stock screen. Let me now move to the screen that will allow you to analyze the ESG indicators of your portfolio. So basically, you'll find the same kind of presentation. We have this ESG metrics table, which tells us that we have 22 instruments in our portfolio, 87% equities, 11% trackers, and we have a residual of cash for 2% of the portfolio. The average ESG score of my portfolio is 49. The median carbon intensity of the stocks or the companies that compose my portfolio is 640 tons of carbon per million euros of turnover, and the average share of women in the workforce of the companies in my portfolio is 36%. You will find the same disclaimer, the same notes describing the indicators. You can now browse all these indicators for all the companies of your portfolios in this table. So just a few words to say that you can, and I encourage you to organize the table by asset class, simply because there is no ESG information about the trackers, so it's better to display the equities first. You can rank resort the table on any other column, such as sectors, for instance. Importantly, I encourage you to click here on the 3 points at the right of the name column and do a pin column, pin left. When you do that, you lock the names of the companies on the left of the screen, which means that now when I browse my screen on the right-hand side, I don't lose the reference to the stock I'm looking at. All the other windows that are like bonuses that we've prepared for you is this table that shows the 10 stocks within your portfolio with the lowest carbon intensity. You have the same for the 10 stocks with the highest carbon intensity. So Nexans is the company that contributes the most to the quite high carbon intensity of my portfolio. Then you have a representation of your portfolio in terms of countries. So I have a very poor diversification of my portfolio with 87% of the portfolio on French stocks. That's very poor. I have also a graphic representation of my portfolio in terms of asset class, in terms of sectors. And lastly, I have this chart which shows how theoretically the ESG performance of my portfolio would have moved in the last 2 years if I had held the same portfolio consistently in the past 2 years. Lastly, we have a third screen, which is doing exactly the same as the portfolio screen, but this time for all the investment universe of the competition. So you'll find exactly the same windows. So ESG metrics is telling us that there are more than 3,600 financial instruments that you can use to build your portfolio. These instruments are for 55% equities, 45% trackers. The median ESG score of the investment universe is 48. That's on a window which goes from 0 to 100. The median carbon intensity of the investment universe is 433 tons of carbon, and the average share of women in the workforce of the investment universe is 36%. Data disclaimer, we've seen that already. Then you have this table that allows you now to browse the entire investment universe. So just like for your portfolio, you can organize the table by type of assets. And I'm sorry, it's a little slow tonight to have equities on the top and trackers at the bottom of the table. You can just in the same way click on the 3 points of the name column and do a pin column, pin left to look the names of the companies on the left-hand side of the screen. And you can, of course, resort the universe on any information indicator that you find worth. So, for instance, GHG carbon intensity to show the companies with the highest carbon intensity in the investment universe. Just like for the portfolio, you'll find here bonus tables with the stocks with the least carbon intensity in the investment universe, the stocks with the highest carbon intensity in the investment universe, the breakdown of the investment universe in terms of countries, in terms of asset class, in terms of sectors, and the theoretical evolution of the ESG score of the investment universe. And that's it for the demo. So I thank you very much for attending this webinar. And if you have any questions, please feel free to ask.
Thank you very much, François, for this presentation. Please, if you have any question, feel free to unmute and speak up or to drop your question in the chat.
Okay, no questions. Do you want to say a few final words, Roxana?
Well, I think that now our challengers have all the tools they need to move forward in the competition. So we hope that you enjoyed this webinar and you will enjoy the tool. And also know that the replay will be available on NextWise platform in the coming days. And if you have any question, you can contact us on via the platform or by email. And we look forward to seeing you on NextWise.
Thank you very much, everyone, for your attention. I hope
you.
you've enjoyed the presentation, and I wish you all a very nice Euronext Trading Game. Thanks a lot.
Thank you, everybody.
Thank you so
Have a
much.
wonderful evening. Bye.
Bye.
Good evening.
Bye.